The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Don't forget you can listen to us anywhere you want to around tfnn.mobi on your mobile phone. Let's check out where the markets are at right now. They did a monster run up out of the gate there, but it looks like they're starting to pull back. We'll see how far they can pull back. Right now, we got the S&P up 10 points. We have the NASDAQ up 15. Russell is up a little over 10 points as well. We got the Dow up 119 on the day. Gold currently up $9 on the day. Silver up over 2%. Massive moves going on silver there. We got copper. It is up about 0.5%. We got oil up 89 cents. It's almost a 1% move on oil. Natural gas is heading south. It's down almost 2% on the day. We got corn is down a couple points, so just a 0.5% there on corn. We got soybeans, though. It's up 11, almost a 1% up move on soybeans, so the ag's going in different directions today. We got euro dollars up a mere 6 pips, pound dollar up only 10, Aussie dollar down 17. We got the euro yen down 26 pips, US yen down 29, pound yen is down 36. Dollar CAD currently down 2 pips on the day, dollar franc down 14 pips on the day. So last week was a quiet week on the news front. This week got a little bit more activity going on. So let's go through. We had a lot of things coming out this morning, and give me a second here. I'll pull up a chart. We'll walk through it with you step by step. But looking on over here, we'll pull up the euro dollar. It had just a whole slew of announcements happening this morning, and with that, usually you'd expect a little bit more strength. But in the morning, when they started talking, we got a nice V spike right there. Started just heading on up, just hit a one deviation move. And now it's been pulling all the way back down to settlement. And Draghi came out. He had a little speech at 9 o'clock. Usually that is going to give you some strength on the euro, but not today. His speech wasn't a major speech. But a lot of times when he comes out and talks, that does give a little strength. We also had a couple U.S. announcements that were released. We had the flash manufacturing PMI, the long-term purchases, capacity utilization, and industrial production. Those aren't major tradable events that we go in and look to trade on. They usually don't have a really high impact. But, looking across the board, the Empire State manufacturing came in quite a bit lower than expected. Actually came in at 1 on an expectation of 4.9. That's better than the last report, but worse than the expectation. We had the revised non-farm productivity. Basically came in pretty much right on expectations. This is another one of those reports that's still delayed. They're still not caught up on all the reports from the government shutdown there. And we also had the foreign security purchases, much lower than expected. They were expecting around $9.24 billion. We only had a $4 billion move. And so we could see that obviously had a little bit of a impact on the dollar, not buying all those other currencies, gave it a little bit of strength compared to some of the other currency pairs. And like I said, we got a few more little things that are coming out tonight. We do have the RBA, the Australian Fed assistant governor. So remember, the governor last week said that he wanted to see the Aussie down at 85 cents there on the dollar, and so that gave a big shock and move to it all, and it crashed. I mean, just literally just flew down, but then bounced back up and was actually able to keep some of that. And it's been running back up ever since that little announcement that he made. You can see right there where it just dropped right down there, back there on the 12th. But it's been rallying back up, trying to get back up to that point, but obviously hasn't made any real progress, just a little bit of a bump back up. And we'll see where it ends up. But it basically just filled in the gap, you could say, on the Aussie dollar. Not really so much a gap trade strategy that I do on currencies. In the sense of, you don't have the dynamic of when you do a gap trade on indices, there's all those stocks where the orders haven't been filled that, you're looking for those limit orders potentially to be filled. That can put a drag on it. We did just have a pretty big run this morning, though, so we're going to have to just see how that one plays out today. a lot of times they do feel a lot of purchases going on today in the bonds market, and that can also, of course, lead to a little bit more of a rally. If you've never done this before, it's a really interesting thing. If you go to the New York Fed's website, and on the New York Fed website, NewYorkFed.org, you can go over to markets, and then you can go to open market operations. You want to see all this bond buying that's going on. And you have a couple things going on. One, you can see the temporary purchases happening, which they're doing like crazy. I was reading an article in the Wall Street Journal the other day, and it was talking about how they're looking at using these new, repos as their way of potentially being able to raise interest rates without having to raise interest rates. So it's a complicated program, to say the least, but it adds up to a lot of government interference. And we had $6 billion today. We had 17. So there's $6 billion, $17 billion, a whole bunch of it in November. I think we're going to see this pick back up in December. And like I said, we did have a big purchase today. We had $6 billion, and we haven't had just a whole lot coming out in some of the previous dates. But they made a big announcement on the 18th about things that are going on. But this is one of the biggest purchases they've made lately, and we've had $10 billion, $15 billion, $20 billion, another $6 billion one. So it's one after another. They're doing their little thing, their little dance, trying to strengthen the dollar, trying to raise the interest rates without having to scale back QE immediately, without having to raise interest rates. So now they've added in just one more factor on jacking up the markets. And just be aware of that. That's happening just about every day. And you can see where those happen right over here on the temporary. And you'll see the market operation closes around 11:45 every day. So you ought to see an impact around 11 o'clock on most of the markets. And you can go in and just look for the 11 o'clock, and you'll see, usually a lot of times that's where you'll see a reversal in the market one way or the other. So in this case, dollar strength, oddly enough. You can also go over to the permanent market operations, and you can see what they have scheduled for the month. This is the QE, the $85 billion. And they'll actually lay out the entire schedule for you. And you can see every day, what did they do the last 2 weeks? What do they plan on doing? What is their layout for the next month? So all these details can be found right here. Again, they're open market operations. And so there's the schedule. And so we know, okay, well, right here on the 16th, they have about a $2.75 to $3.5 billion purchase planned. And don't mix up this temporary with the permanent. The permanent's the $85 billion. So we got the $45 billion in Treasury securities and the other $40 billion that they're doing as well. But this right here is where that $45 billion part comes from. And so if you ever see tapering, this is where, if they ever actually get around to it, this is where you'll see it immediately. But what you may not notice, if you don't know about this, is they may just up the amount they're doing in the temporary purchases. So lots of manipulation. It's good to be aware of this. It's good to know when it happens. And when is it a larger than normal day, like on the 19th, this Thursday, they're going to do 4.75 to 5.75. So that's a pretty massive purchase. And something that's a little interesting that I haven't noticed, I don't think, before, just now noticing this, and I don't know if this is a typo or what it is, but we're actually seeing two of them on Thursday. But we don't see one on Wednesday. So usually you're seeing them every day, Monday, Tuesday, Wednesday, Thursday, Friday. So either the Fed has a typo or they're doing a double purchase. My guess is that's a typo, and that should say Wednesday. But so right there, Thursday, big purchase planned. And they'll lay out that schedule so you know when it's going to happen. What you don't know is what they're going to do on the temporaries. And so just start keeping an eye on that. You'll start seeing some patterns. And that's just one more thing that you want to be aware of. That's what diagnostic trading is about. It's about being aware of fundamental, seasonal, technical, statistical things in the market, so that way you can be one step ahead of the markets. All right, well, let's see. And I'll leave that up for you just for a second so you can see that. But again, it's NewYorkFed.org. And under Markets, Open Market Operations. And we do have some news coming out this week, some news you want to pay attention to. So let's do a little walkthrough on the news for the week. Reminder, Aussie Assistant Governor is speaking. Also, the meeting minutes are being released, and the motor vehicle sales are being released outside of Australia tonight, starting at 7:15, and then there'll be several announcements coming on out. Not really a big tradable event, not one that you go in and straddle or strangle necessarily, but if you're a nighttime trader, expect some volatility, and you can look at, there's obviously a lot of different ways to take advantage of that depending upon how you trade. Now for tomorrow, We have the British CPI coming on out. So UK CPI is going to be released. It actually comes out at 4:28, even though many sites will list it at 4:30. So if you have the Reuters news data feed, you can get it 2 minutes early. So you'll usually see a little pop or something like that right in those 2 minutes. And you can use the 5, the 6, the 7 o'clock spreads or binaries. You can even use further out, binaries if you wanted to, I guess, because now they have the dailies going sort of around the clock. They have the 7 a.m., 11 a.m., 3 p.m., 7 p.m., 11 p.m. So, but you just want to be able to compare and find the best ones. And when you're going to do trades like this, let's sort of walk through it for you. So that way you have, step by step sort of what to do. Let's say you're going in and you're looking over here at the, let's just say spreads. And we scroll down, we're going to choose the pound. Okay, so I'll get rid of these right there. And then what I'll do is if I'm going to do a straddle, this is my straddle settings. I'll put $100 on max risk, and then under the risk reward, I'm going to put 1-to-1 because I would need this thing to be a good straddle setup. Then you'll scroll down. Oh, also, of course, make sure you choose both directions. And right there. And that'll let you see what potential possibilities there. We can see that blue one might be a good one, so we can grab that one. And then see if we can go to a good sell that lines up. How did I do that? How did I do that so quickly? Well, what I did is I just looked at it, okay, and I realized, okay, there's only a few of these that are going to line up right with what I want. So I can just click on them and see. Well, that one looks decent. That one could work. That one could work. So now we just want to narrow down. What's the best one? Okay, let's say this is, 30 minutes before the news. We're looking to get in. Well, I'm going to look at timed expiration, 41 minutes, 101 minutes. Well, I like that I have more time. If your news announcement, comes out at 2 o'clock, probably don't, unless you're doing a butterfly or something that you want it to expire then. But if you're doing a straddle or a strangle on the news, probably don't want it to expire right at the news announcement. But let's say it comes out at 1:30. Okay? So we leave that one up there as a potential candidate. Then we scroll on over. We look at break-even distance. I honestly am not that concerned with break-even distance when I do a straddle to a point. I'm going to be realistic on it. But the average move on the pound dollar on this announcement is 70 pips high to low. And 70% of the time, it moves at least 50 pips. Okay? So understanding that that's the average move and how far it moves, then I don't care if there's a 10 pip break-even distance. Okay? That's literally not my concern. Now, I am concerned about that when I'm directionally trading. That'll be a little larger concern. But, you're only talking 10 ticks in addition to that on a big, news announcement. So, now, out of these three, I got to pick what's best. So, looking at these, I'm like, well, that's, now let's just go to risk. So we come back, we'll walk through these steps so instead of guessing, you can know that you have the best spread for your new straddle. Okay? Stay right there. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So what we're doing is we're going through and we're talking about, if you want to trade news, such as you want to trade the pound announcement coming out this week. Now, we're going to talk about some other ones. We're going to talk about Fed funds rate and all that as well. But let's say you want to trade the pound announcement. Then you wanted to go, I don't know what direction it's going to go because you don't. The expectation is 2.2. I'd like it to, come off that by, 0.3 or so. Ideally get a 2.5 or 1.9. on that announcement on that CPI. The reason I like the number to be different than what the expectation is because that's called fundamental shock. And so, the 2.2 is priced in. So if we get a 2.5 or 1.9, then we should get a larger fundamental shock, which means the price is going to adjust accordingly. So if we got a higher number, in this case, that would make a stronger pound. If we got a weaker number, that'd make a lower pound. But again, we don't know what direction it's going to go. So we're going to go both directions. We're going to buy and we're going to sell. And the reason this works is because on the Nadex spreads, think of them like a call option or a put option, okay? On a call, if I buy a call on a stock, let's say I pay, $5 a contract. And then, by the way, in this one, when you're done options on a stock, like you're buying 100 options, right? Well, here you could buy 1 or you could buy 100. So you could literally just put up $5 risk. But let's say I put up $5, then the most I can lose is $5, no matter how far it goes against me. But if it goes in my favor, far enough to cover my break-even distance, right? Got to cover your premium, your time value in there, then you can be profitable. Well, how far is the premium? Well, we're not doing weeklies and monthlies, which means that our implied volatility has a lot less impact. It does have an impact, but not near as much. The further you go out from expiration, the higher your vega is, meaning it has a bigger impact on your option pricing. So the nice thing about having them where they're closer, 1 day or less, means that implied volatility has a smaller impact. You're paying for less premium, theta, okay? And that means your gamma goes into full throttle, putting your delta at a 1 very, very fast. All right, so if you know what I'm talking about, that means you're an option trader. If you don't worry about it. You don't need to know what I'm talking about to trade Nadex spreads. If we hop back over to the Nadex spreads, then what you can see is we got pound dollar. We're trying to choose the buy side. We're acting as if the announcement's coming out here shortly, okay? And we have 3 on the buy side here. One of them has 33 minutes till expiration. One has 93. I personally would rather pay a little more, okay, and have more time to allow the market to move. Because sometimes it pops up, and then you get a nice little spike. It moves like 40 pips, and then it pulls back down, and then over the next hour or so, it just moves right back in the right direction. So if you have that 30-minute one, you may not really be able to pull it off unless it's just a straight big move. So I like to have more time. So my preference is, if the risk is not that much different and I can have more time, I'm going to take it. So we go look at it. We got a $5 risk, we got a $14 risk, and an $8 risk. Well, the $8 risk definitely isn't that much more different. That's only a couple bucks. Now it's 6 and 8. So I could get rid of that spread. I go, okay, now I have these 2 spreads to look at. This one, $15 risk with $133 prop potential. I have an 8-to-1 maximum reward to risk ratio. This one, I have $8 risk, less risk, basically half the risk, $290 prop potential. I have a 32-to-1 reward to risk ratio. So it's very obvious when comparing them. I get low risk, break-even distance, not a big deal. I'm expecting a 70-pip move. I have plenty of prop potential. Now, I'm not going for $290. I'm usually going for 1-to-1 or more if I'm going to watch it. I would definitely say trying to determine more than 1-to-1 is very advanced because you really are reading charts, and on news, things can reverse really quick. So, you be careful if you're trying to do that more than 1-to-1 thing. If you are trying to do that, then I would suggest you take off half when you've doubled all your risk. So that way, if the other half, if you're wrong, at least you come out of the head, out ahead at break even. So if I put on, 20 contracts, and let's say I end up having a $20 total risk and I make a net $20 on one side, then at least that covers if I lose on the other half. So put on 20, 10 of them, make my total risk, covers the other side. If that one loses everything, I'm still okay. All right? Now, a big thing to remember is spreads are not an all or nothing contract. Okay, very important. Again, they're not an all or nothing contract. The only way they're on nothing is if it expires below, if you're buying below the floor. So the floor here is 63.10. So if I buy it and it expires down at 6,300, 10 ticks below that, then I'd lose all $8. Okay, now $8 I know sounds small, but you could also do 10 at 80. You could do $100, $800. So you can make these much larger. I'm just keeping it simple on the small size. So now we've found the buy side. When we come back, we're going to talk about the sell side and what the best contract's going to be to make our straddle, and then we'll talk about how to calculate your profit. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. So what we're doing is we're talking about doing a straddle on the pound dollar, where you pull this up like 30 minutes before the announcement comes out tomorrow. And we just went through how to pick the buy side of the straddle. So if the market were to go up, we only have a $6 risk on this trade. Not bad at all. Now we got to go through, and we got 4 of these. And this can seem a little bit overwhelming at first. Like, wow, it seems like I'm going through a whole lot of stuff. The thing is, if you're going to do this trade, you're doing this already. Or, here's the scary part. If you can't do this, okay, if you can't use this to figure out which ones you want, then that means you're guessing. So if you try to go over to the Nadex platform, and then you're trying to go in and go, okay, Forex, spreads, pound, dollar, and now all of a sudden you're clicking on here, you don't see P&L. You have to open it up and actually choose a quantity on the ticket, okay? So you have to do all that, or just guess. And you know, you don't want to guess, right? So if we go over here, we look at these, and we can see, okay, we got pound dollar, we got some sell sides here. What's going to be our best? Again, we got 24 minutes. I prefer, if possible, to have more time. So what I'll do real quick is I'll just run over and look at the break-even distance and risk. Again, break-even distance, not my biggest concern here. But we got $6, $4, $8, you know, with more time. So I'm going to go ahead and drop that 24-minute one off. Then, something I notice right here is this one has a $68 risk. It's that big red one we see right there. See how the color on the P&L graph, this is making money, losing money, and this is The price goes up, price goes down. What is your profit and loss? Well, let's go ahead and get rid of that one. That's not going to work for doing a strangle. All right, because we need one of them to stop losing money, right? Like, so if it moves down, that one loses at $6, but the other one keeps going. So now we got to choose between the remaining two. 150, they both have the exact same amount of time. This one's a little wider, but we're only going for 70 pips. So if there's 145 and 290, who cares? So now I'll go for the wider one if everything's equal, which you'd be surprised how often it happens where exact same amount of time to expiration, exact same break even distance, exact same risk, more profit potential. In that case, you'd always choose the one with more profit potential. So, but this isn't the case. So this one right here, we have a 14 pip to break even and a $4 risk, or an 8 pip to break even and an $8 risk. So now let's look at them, and we'll just put one on top of the other there. So we got this one right here. One thing that's really important to notice on this one right here, notice how we have 6,300 to 6,310. So there's like 10 pips of like dead zone in there. All right, meaning if it expired in between those 10 pips, we'd lose, all, in this case, whole $10. We'd lose all $10 or $100 or $1,000, depending on how many you're doing. So I probably don't like that one just because the floor right there doesn't line up with the ceiling right here. Okay? So I'd rather find one that matches up. Well, we go down here. Here's the 6310 that does match up. Only has an $8 risk, has a massive prop potential, has a 32 to 1 reward to risk ratio. I can put this trade on right now for a $14 risk. So, and then, if you add in the exchange fees, and you're looking at, $15, whatever, 15, $16 risk on the entire trade. So not a bad trade at all, as long as I expect there to be movement. Now, some people make the mistake and they're like, well, wow, if you just do that, why don't you just straddle and that's all you do? Well, because they build in expectation of movement. They don't really expect there to be a lot of movement on the pound here in the next hour. They don't expect it to move up or down really more than 15 pips. If you're a butterfly trader, here's a big tip for you. This is a total side note. But if you look at the risk on both sides, or you could basically say the break-even distance, however you want to do it, but if you look at that, that means they really don't expect it to go further than that combination. So they're really not looking for it to go really more than 17 pips up or down. So if you can sell 17 pips higher and buy 17 pips lower, you probably have yourself a good butterfly between now and 3 o'clock. So just a total side tip for you. Back on the straddle. Sorry about the rabbit there. Anyway, so our total risk on the trade is going to be, not accounting for exchange fees. We're looking at a $15 risk at the moment. And so how do I calculate just what a 1-to-1 would be? And some people go, well, I could make a whole lot more. Well, yeah, you could, but 1-to-1's a lot easier, okay? Base hits over and over and over again. You can go for the home runs as long as you're willing to get, struck out a lot. Talk about one, just base hit, base hit, base hit, base hit. It adds up quick. So if we go, 9 plus 6, we got a $15 risk. You know what that means? We need to make $15. When it's all said and done, I want to net a $15 profit on my P&L. And again, your fees go down as your volume goes up. So I don't really worry about the fees. And the reason I say that is because when you pass 10 contracts, you stop getting charged exchange fees. So if I do 100 contracts in a single order, it'll be the exact same. It'll be $9. Just as if I did 10 contracts in a single order, it'd be $9. If I do one contract, it's 90 cents. So I don't really worry about fees because they get smaller as your position sizes over time get larger. I got a $15 risk. I need to make $15. So the market flies up, I want to net a $15 profit. Market flies down, I want to net a $15 profit. Now I need to assume, every once in a while you get lucky, it goes up and comes back down. But I need to assume that it's just going to go straight up or just going to go straight down. The reason I say that is I need to assume the other side's going to lose. Okay? So, which isn't bad. That's good. The other side losing, as long as the other one makes more than the other side loses, it's perfectly fine. So if I get a $15 risk, here's my formula, and there's a couple other ways to do it. There's some cool little ticket tricks. Takes a little bit to wrap your head around it, but it's pretty cool. But I'm just going to teach you just a simple formula. If you'll add the risk at both sides. So 5 plus 9, we got, now it's getting even smaller. Now we only have like $14 risk. But we'll just say we got $15 risk. We'll leave it where it was. So we have $15 risk and plus the risk on the other side. So let's say on the buy side, I need to make $15. Plus, I need to assume I'm going to lose that $9 on the sell side. Okay? If I make 15 on the long and I lose 9 on the short, I'm only going to net a $6 profit. All right, make 15, lose 9, make $6. So if I want to keep all $15 of risk, if I want to double my money, okay, I need to make the $15 plus the amount I lost on the other side. So 15 plus 9. I need to make $24. Now, if I go over here on the sell side and do the same thing, okay, well, I got $15 risk. Now it's back at 15. That's priced at 6 at the moment. So $15 risk, and this is saying, hey, I want to make $15 on the sell side. I want to net $15. So I need to assume I'm going to lose in the long. Like, assume the market just goes down and this profits. Well, then I need to assume I'm going to lose that, basically $6 on the other side. So plus 6. So I need to make $21 if it goes down. I'm going to make $24 if it goes up. So how does this work? Well, let's go in and do it. I'll walk you through it using the scanner here, make it really simple. Okay? So we're going to go in, and first we're going to buy this contract over here. See if it got me logged in. Let's see here. Oh, yeah, live. Since we're doing a demo, we throw it on demo. There we go. Notice up here at the top, you can choose live or demo. So you can use both of them. So go down here, and so we're going to buy this one. You can pop that ticket up for me, and then we're going to sell this one, and that'll pop that ticket up for me. Okay? And so in doing that, we got a sell right here, and we got a buy right here. All right, so pretty simple. Just make sure it's sort of matching that current price there, 63.01. See right there? And if it wasn't, I can click this and it'll update the price. So now I can hit sell, and then I can hit place order to buy. Now what I've done is I put on a straddle. I'll probably be down the bid-ask spread right now, so I'll show an immediate small loss just on bid-ask spread. Now I got to go, okay, well, how do I make money on this? Remember I said on the one I bought, I need to make 24 pips, $15 plus the $9 risk on the sell side. So I'm going to click this little button right here, and that's just going to open up a ticket in the opposite direction for me. And I need to put it 24 pips higher than where I originally bought. Well, I bought it at 63.16. So we go, 1.6316 plus 0.0024. Or if you want to make it real easy, just do 16316, okay, plus 24. And then you can just add in the decimal place yourself, 1.6340. What that does is this actually going to make me, it's going to say max profit. Don't even worry about the max profit and loss on closing a ticket, because it's calculating it like you're entering. So I know that's confusing, but don't even worry about this max P&L. But what this is going to do, if I bought it at 63.16 and I sold it 24 pips higher, okay, 63.40, I'd make $24, lose $9 on the other side, I'd net a $15 profit. So I'm going to hit place order, and now what's happening is that order is going to be working for me. Now I'm doing this as an example, again, that's why we're in demo, for the pound trade for tonight, okay, meaning don't do this trade right now. And now on the other side, the sell side, okay, I had to make 21 ticks, okay? So I'm going to go in here and I'm going to buy this one back. And if I sold it at 1.6301, and then I got to buy it back lower, or I can just do, if I want to do it easy without worrying about decimals, just 1.6301. And then I'm going to subtract the 21 ticks minus 21. So I want to buy it back 21 ticks lower. If I sold it at 63.01, I want to buy it back at 62.80. Okay? So then over here, just put in 1.6280. And now I'll have a working order at a 1-to-1. It'll pop up in there in just a second. And you can see how it says working orders. Okay? And now, when the news comes out and the market explodes one way or the other, it doesn't even have to move that far. It moves basically 20-something ticks on each side, and I could be profitable on the trade. Now, if I ever need to edit this, cancel it, whatever, then I just click on this little wrench. Just open that up, and it gives me the ability to amend the order, cancel the order, whatever I think I need to do on it right there. Okay? So amend and cancel are built right in. And let's see, what else do we have? We got amend and cancel. Now, let's say you do take your profit. This one's probably going to be worthless. You probably lost all $9. Is there a reason to close that trade out? No. One thing is, if it expires worthless, because you made all your money in your long side, so you're glad. You risked $15, you made a net $15 after the $9 loss. So if you try to close that trade out, let's say you could close it out, because let's just say somebody was crazy enough to take the other side. So let's say you did close it out, you'd be paying a fee. If it expires worthless, you don't pay any fee. So you're going to save yourself fees by not closing it. 2, if it comes back, you could either 1, leave your order there, or 2, one thing I like to do is I like to set the exit at break even. So let's say it takes off, it hits my 60, 280, or we'll say it flies up, hits 63.40, takes profit on the long side. I'll go back in, and I was like, well, I got in this at 63.01. If I could just capture that, that would basically increase your net, right? So you'd make an additional $9 on your $15 risk. That's a good additional return as far as percentage-wise. And so I just changed this back to where I got in. I'd go and I'd change this thing to 63.01. And, make sure you got everything right, 63.01. And then I'd hit amend order. And now if I can get out of that other side at break even, that's just more money in my pocket. So I'm just trying to get 1-to-1 on one side. But every once in a while, it'll fly up. You'll hit your profit. You go back in. You can hop out. And sometimes you can actually get in. It flies up and... I've actually sometimes just not adjusted them. I just left them there because they were worthless, and I walked away and I didn't adjust it. And probably not the best. I mean, it's not a bad thing. You're still up 1-to-1 no matter what happens. But I've had a few times where they've actually just totally flown the other way, and I've made a really nice profit on both sides because the market flew up and then flew down. So when we might have an announcement coming up this week, right, that could cause something like that, like the Fed funds rate. Right? Markets go pretty nuts. So that could be a time when the market flies up and hits it and flies down and hits it. Okay? So anyways, right there, that's an example of putting on a straddle. And going over to sort of the news that's coming up this week. Now, the other things, let's see what else we have that we can take advantage of. And I gave you the stats on that one, but just to repeat them for you and demo these, you don't have to go in. It's, people are they're in such a hurry to make money, which I get, okay? But experience is a very expensive teacher. And if you blow your account out before you learn the little intricacies, like how to get out, how to amend, the GDP number comes in at expectations. You know what you're doing? You're shooting for break even. You're not trying to make, $15 anymore. You're just trying to make $9 on one side and $6 on the other just to cover the risk on the other side, just to get out of the thing. So, just those little things that you got to learn that, you're going to have to do and track your results. And don't compare all news trades to each other. Don't compare a GDP to an FOMC, to an unemployment rate, to ADP, NFP, all that stuff. Go in and track your results, but also track them by news report. And maybe you'll find that, I never do well on this CPI number, but I rock it on this GDP. And so over time, you may cross some of these off the list that you see aren't working for you. Okay? Some people I know, they actually do binaries and they do straddles at the same time while they're demoing, to figure out which one they see works best over a consistent basis. Okay? And that all depends on your schedule. I know I have a lot of traders that will tell me they actually put this trade on because it doesn't happen until 4:30 and they're not going to be up. They'll put the thing on around midnight if they can find a good low-risk straddle. So, some of the things to consider. All right. Again, this is a 70-pip expected move, high to low. And we have a couple other announcements. I'll talk about those when we get back from this break. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. Okay, so we went through how to set that up, how to put the pieces together. And so you ought to be, pretty much prepped for that. Again, if the number comes in at the expectation, you can use websites like Forex Factory and things like that to help out, in looking up the numbers and the stats. And, there's investors.com, and I know Benzinga has a new thing they've been putting out lately. So there's a lot of stuff out there you can check out. But, when you're going through those, when you're using those, just make sure to look for that expectation. If it's not there, don't try to force the trade. Okay? And, you need to learn to look at some things. How did the number come out? Better, worse than expected. Was it better, worse than last time? Did they revise the last number? Okay? And, for example, if we were looking over at Forex Factory, and we're looking at the pound CPI, I can actually go over here and click and see what happened on the last number. It came in at 2.5, or the forecast was 2.5. It came in at 2.2. So it was worse than expected. It was worse than the last number. And there was no revision. If there's a revision, you'll see like these little arrows right next to it. And so they'll say like this one, they actually revised the PPI input. They revised it down, or to -1 versus -1.2. So you can go in here and you can just sort of see. Again, that's the 3 things I look at. Actually, I guess you could say there's 4. So 1, did it come in better or worse than expected? What should that mean for the currency? You need to know up front. If this is better, pound should go up. If it's worse, pound should go down. Okay? How far off was it with that so that's sort of one and the same step. Was it better or worse than last time? Were there any revisions? And if you want to get really technical, there's one more thing you can do. If you want to sort of look at a little bit of a seasonality, you can go back and look at the last number. How does it compare to this time last year? Wow, it came in the exact same as last year. So year over year, the CPI didn't change for the October release. So, again, better, worse than expected, better, worse than last time. Any revisions on the last number that just came out? How did it compare to last year? And then the one other aspect I'll look at is I'll see what other reports are coming out. Now, those good or bad. And notice how we got PPI input, RPI, CPI, HPI. Now, CPI here, that's going to be the big number. Okay, it should overshadow even good news. So even though the PPI input came in a little better than expected, they had to revise the last number down. It was, also, it was a little better actually than the last one. If you look at it a year ago, it was a little better than a year ago. So it was sort of a, couple good, couple bad things, like missed expectations, but, improvement in that number. But this one was way worse. This is the important number. And then there's some, we had a whole slew of 4 other numbers, minor impact numbers, but they were all negative. So that just adds further to the sell-off expectation over on the pound. And if you really want to get into this, okay, and it's worth it. I mean, in my opinion, it's very, very worth it. But you go in here and you load up your data. You go in, let's say we load 90 days, okay? And you can go back and then you can actually look and find when that report last came out in October. And so that way you're able to see, if the number came out last time, what was that date again? We had, let's see, on the CPI, November 12th. Okay, so you go back and you just look at last month's and go, what happened? This is probably one of the most helpful things you can do for expediting your learning curve. And let me just shrink this in and pull this way back here. So right on back to November 12th. Okay, here we go. And we can see what happened on it. But you pull that number up, and let's see if I can pull it up right before the show. I know we're about to run out of time here. So there we go, November 12th. Number comes out, and look, we get a drop of 59.41. In this case, down to 58.40. We had a 100 pip drop on the last time this announcement came out with all that negativity. So go back, look at some of those. It'll let you see how things work out. I hope you're picking up some of these pieces. It's a great way to trade. See you next.
I believe that we're all here to contribute something unique, and that deep within us lies a special gift, a special talent, our own bit of genius, just waiting to be tapped into. When it comes to trading and investing, I can help you tap into yours. Hi, I'm Steve Rhodes with TFNN, and on Thursday, December 19th, I'm hosting a 1-hour workshop where I'll share with you my most incredible discovery yet, the Rhodes Momentum Indicator. I developed this tool with one outcome in mind, to do what nobody else considered possible, to put the power of the most advanced indicator, scanner, and trading strategy in the hands of people just like you and me. I can promise you this, you'll never look at a chart the same way again. This event is available to all subscribers to my newsletter service, Mastering Probability, which for the holidays is available free for the next 30 days. No charge whatsoever to new subscribers and no obligation on your part. Please join me by going to the homepage at TFNN.com to sign up for this once-in-a-lifetime opportunity.